Hi, I'm Matthew Gardner, Chief Economist with Windermere Real Estate. We're being asked a lot of questions right now, obviously, about COVID-19 and the potential impacts on the US housing market. So I thought I'd take a few minutes today to tell you about my thoughts and where I think we're going to be heading. I'm not going to get into the weeds when it comes to the economy. It's unnecessary. However, there are a few things which we do need to think about. Firstly is this. The so-called draconian measures that the government was looking to implement, i.e. shutting businesses down. A lot of people were kind of ignoring that for quite some time. Clearly now they are not. Most businesses, or at least a significant number, are now being closed down, and because of that, there is going to be a knock-on effect when it comes to the economy. As it stands right now, we certainly had the first 2 months of this quarter, Q1, were pretty good. Even though March obviously was terrible, that still means I think the US economy grew in the first quarter of this year. However, I do expect the numbers to show for Q2, the second quarter, that the US economy actually contracted. Now, the big question now is how deep is going to be that contraction and for how long? If it flows through into the third quarter, then technically speaking, we have had a recession. But we'll talk more about that in a little while. Because of what we've seen so far, we've seen a significant amount of monetary stimulus coming in. Obviously, Chairman Powell and the Fed made some significant moves over the last couple of weeks, but more specifically on Sunday, to try and calm the markets. I think that is a positive thing. But at the same time, we still need a lot of what's called fiscal stimulus. These are things which I'm afraid have to be approved by Congress. Those are going through right now, and it's going to help out certainly small businesses, potential small business loans, these kinds of things, just to make the fact that a lot of businesses have been forced to close down, just make it a bit easier for them. That is going to be important. And it's going to be important for one reason. 70% of the US economy is consumption. It's us buying things. If we're not out shopping, we're not consuming, the economy therefore cannot grow. So, will we come out of this? Yes, but the question right now, is it going to be what's called a V-shaped recovery, i.e. we go down quickly, we come back up quickly as well, or whether it's going to be a U-shaped recovery. We go down, we kind of languish down for a while before we come back out. Ultimately, however, we will come out of this. I think the second half of this year, in my opinion, is going to be significantly better than the first, and therefore we can start to grow and expand again as a nation. All right, so how's this going to affect housing? That's going to be a very interesting question. Housing is what's called not very fungible. What that really means is it's very difficult to replace. Because of that, we're seeing an interesting attitude towards the market right now. In terms of home sellers, they are being remarkably cautious. So we could actually see listing inventory drop over the course of the next several weeks. Now, we haven't seen that yet in Seattle, but we certainly could. That is interesting to see just unto itself, because home sellers, they certainly would like to move. However, they're saying, you know what, I don't really want people coming through my house that they perceive to be carrying the virus. They're just going to hold off a little bit. But again, not all markets are created equal. Some will do better than others. On the other hand, home buyers, well, they are looking at the world in a very different mentality. They're clearly looking at what are remarkably low mortgage rates. They'd like to take advantage of that. But at the same time, they are heavily influenced by the US economy. Now, what are they doing right now? They're trying to balance one with the other. If they are comfortable with their jobs, even through this period where we're really not quite sure what's going on, then they absolutely will move, but others will probably delay that. In addition, if they're looking to take money out of the stock market in order to make their down payments, well, they're probably not going to do that either. In aggregate, what do I expect to see? We'll probably see a 10 to 15% contraction in the number of home sales across the US just in 2020. That said, it is going to be brief. We'll see a contraction, be short, it'll be sharp, but I also believe that will pick up again as we move forward. I mentioned about interest rates. Certainly, they dropped down fairly significantly a couple of weeks ago. But interestingly enough, they actually moved up in the last week. It was a kind of bit of an anomaly. Mortgage service providers, they were just overrun with requests for refinancing, and so they actually sort of allowed rates to rise a little bit. Now, the Fed made some additional changes, buying significant amount of mortgage-backed securities on Sunday. Because of that was the stability in rates, and I believe they could come down a little bit further. Not massive drops, but financing is going to be remarkably, not easy, but essentially, relatively speaking, very cheap. Now, housing in aggregate. I'm a great believer in housing. Right now, when we came out of the Great Recession, credit quality requirements were very, very high. Down payment requirements were very, very high. Housing is very well positioned to come out of this very, very sad and very hard situation, I think looking rather good. Mortgage rates are low, and they are going to stay low. That is, again, I think a great positive for the overall housing market, and the fact we're not adding on a lot of new supply. We're not building a lot of new construction housing. We're still creating households though. Therefore, that does put upward price pressure ultimately on the existing housing stock. So where do I see the world in the course of the next several weeks, several months? It is going to be hard. It's going to be hard, I think, for the next couple of months before we start seeing some light at the end of the tunnel. But light there is. As far as housing goes, well, certainly some markets could be affected more than others. Markets like Las Vegas, heavily influenced, obviously, by casinos. We've seen MGM shut down. That could be a problem, but again, a short-term problem for them. LA Basin as well. Seeing significant contraction at the Port of Los Angeles. That could cause some knock-on issues there as well. And finally, I'd say the second housing market. If there is a market which could get hit pretty hard, it's probably going to be that, because they tend to be discretionary purchases. People don't have to buy second homes. So, do I believe in housing? Yes. Will we recover from this? Yes. Are we in another 2008 situation? Absolutely not. There is nothing systemically wrong with the US housing market, other than affordability. But that's maybe a topic for a different day. For the mortgage brokers out there, for the real estate brokers out there, what should you be doing? I think that you carry on doing what you're doing. Support your small businesses. Go out there, see what you can do to help. Buy gift cards. Order out. I think there are things that we need to do in our own communities in order to help those. There's a lot of people out there who are going to be suffering, certainly in the service industries, for a very long time. So the more we can help them out, the better I think we're going to be. I'll come back periodically and update this. Hopefully you got something out of my comments. We will get through this. Everything's going to be okay.